everybody, my name is Brooks, and the title of this video is Analyzing Profitability Across Product Lines Using Gen AI. And now we're going to say, here's the data set of monthly sales for product lines. Please calculate profit for each row using the formula. So here we got our table, the different months for each one of them. We got units sold, unit price, variable cost, fixed cost, marketing spend of region, between west, east, south, and the monthly profit for each month and for each company. Now we're going to ask it to calculate profit margin for each row, and the formula would be profit margin equals profit divided by total sales amount. And we're going to also ask it to add a column for profit margin and return the updated tables. So now we got the updated sales data table of profit margin. See, for the insights, well, here's the graph first, chart. So it's updated here. And the insights be alpha margins start at 0 in January and they climb 15% by July. Beta, the strongest performer, reaching 20% margin in May. Gamma, consistent growth, stabilizing around 15 to 17% margins. Overall, beta dominates profitability while alpha shows steady improvement after the break even. Now we're going to ask it to summarize total profit by product line, which product is most profitable overall. So total profit by product line between January and July. Alpha starts slow, breaks even January, but climbs to $6.90 in July, totaling $25.95. Beta is a strong performer with consistent growth, reaching $7.75 in June, totaling $33.45. Gamma slightly edges out Beta, peaking at $6.65 in June, with the highest total of $34.65. Gamma is definitely the most profitable overall between the three, and it beats Beta, which was in second, by 120 profit units. Now we're going to ask it to create a bar chart showing total profit by product line. So here's the bar chart. It also, as you can see, between alpha, beta, and gamma. Alpha's total profit $25.95, steady growth. That'll be alpha. And beta right here, second place with $33.45. It's pretty consistent month-to-month gains, but gamma is the ultimate leader at $34.65, surpassing beta. This visualization makes it clear that gamma is most profitable overall, though beta is close right behind it. Now we're going to ask it to create a line chart showing monthly profit trend for each product. Here's a line chart that I requested, and it shows monthly profit trends for the three companies side by side, so we can compare its performance. Mostly alpha right here kind of goes here and goes down a little bit, but then consistently goes up. Gamma in the red right here going up, and then beta going up to July. Alpha starts at break even in January, then climbs to $6.90 in July. Alpha was the blue one. And beta, strong growth trajectory, peaking at $70.75 in June. Beta's one in green, peaking there. And then gamma, which is the red, is pretty consistent all the way in June before leveling off at $6.65. And this line chart here shows that it's clear that alpha is catching up, while beta and gamma dominate overall profitability. We're going to ask it to interpret the results. What trends did it see? What recommendations would you make for management? These are the trends that Copilot observed for alpha. Start at break even in January, steady growth each month, $6.90 profit in July. Profit margins improved from 0 to 15, showing resilience and efficient gains. Beta in the East region, consistent, strong performer. Profits climbing to $7.75 in June. Margins peaked at 20% in May, highest among all the different products. Steady growth, but platooing slightly after June. Gamma in the South region, most profitable overall, with $34.65 profit across the 7 months. Margins a little lower, around 15-17%, showing reliable efficiency. Growth is strong, but less aggressive than Beta's peak, which that was at $7.75 in June. The key insights: Beta and Gamma dominate profitability. Gamma narrowly leading total profit. Alpha is catching up, but it's a little too late. But it's also showing strong improvement, but still behind cumulative profit. Market spin. Market spin increases monthly, but ROI remains positive. Profit rises faster than costs. Fixed costs are stable, meaning improvements in sales and pricing directly translate to higher margins. So recommendations for management: double down on Gamma, most profitable overall. Consider expansion in the South region or replicating Gamma strategy, different regions. Optimize beta's growth. Since beta peaked in May through June, management should investigate whether market saturation is occurring. Support alpha's turnaround. Alpha is finally profitable, trending upwards. Management should maintain investment. We'll also look into efficiency improvements to accelerate the catch up between the other two regions. Marketing strategy ROI is positive, but increases in spend should be tied to measurable sales boosts. Diversity to regional focus. Each product is tied to a single region. Management could test cross regional sales to see if beta or gamma can succeed outside their current markets. Scenario analysis. Run sensitivity tests on unit price and market spend to identify optimal profit margins without risking volume loss. We're now going to ask it to export the bar chart, line chart, as a PNG file is labeled. Good, that's what we asked. Looks good to me. Ask it to output all the prompts using a Word document titled GenAI and Lab Prompts. And that concludes this